Stocks will move huge this week. This might be to the upside, it might be to the downside. We'll talk about all that. But since the market is up so much year to date, this is really a prove yourself time for the stock market because it is earnings season and it's big cap, mega cap earnings season, which means billions or trillions of dollars of market cap are going to move this week. I'm going to talk through what stocks I'm keeping an eye on and what stocks I'm potentially looking to pick up if we have any weakness in the short term. First, if you're new here, I'm Austin. Thank you for being here. I'm a co-owner of CloudMusicSuite.com and I'm a stock market investor, of course, and I'm a shareholder of multiple companies that are reporting this week. Channel's sitting around the 800 subscriber range. I don't know where it'll be by the time I post this video. If you're one of those people and you're back, thank you for being back. If you're not one of those people, go ahead and click that subscribe button. As a thank you for doing all that, here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. They thank you for subscribing. Okay, so this is supposed to be a prove it week in the stock market. We have tons of huge companies reporting earnings, and especially Tuesday and Wednesday are going to be massive. So keep your eyes peeled to the market. If you're wondering why the market's moving, it is because these massive companies are reporting earnings. What we're supposed to be seeing is all the cost-cutting efforts from these big companies actually leading to margin expansion and profit increases. And this is supposed to be helped by the fact that we've seen lower and lower inflation month in and month out. So these companies should really be posting very respectable profit numbers, if not record profit numbers. If we don't see that, let's expect a lot of weakness. If we do see that, we're going to expect a lot of strength in the market. So let's jump into it. We're going to go day by day, before market open and then after market close, what stocks I'm looking at, what I think is going to happen. Before the market open on Monday, the only stock I'm really interested in looking at is Domino's Pizza. I'm not looking to buy shares of Domino's, but it's a very well-run company and I just want to see what's going on with their business model. So I'll be checking out their numbers. Nothing else really interests me on Monday before the market opens. After the market closes on Monday, we've got quite a few stocks that I'm very excited to look at numbers for and potentially pick up shares for. So Cleveland-Cliffs is one of the first ones. I like to look at that company to get a gauge on part of the commodities sector. Next one I'll be looking at is NXP Semiconductor. Some of the semiconductor stocks like Nvidia are up massive year to date, and that's mostly on the back of AI. And then a lot of semiconductor companies are either flat or up just a little bit. So checking out NXP could give us a gauge on where the semiconductor space is as a whole. AGNC and then Whirlpool, we can get a good gauge on the housing market by looking at AGNC, big mortgage company, and then Whirlpool, obviously we know they make appliances, fridges, stoves, etc. They have the KitchenAid brand as well. Whirlpool is a stock I've been looking at for quite a long time as a potential dividend play and dividend growth play. I haven't stepped in yet. If we see any weakness in the short term, I may go ahead and pick up shares of Whirlpool Corporation. Moving on to Tuesday before the open, Verizon's reporting, and the Verizon and AT&T story has been such a drama show. Verizon's a stock that's down 15% year to date, and in the past 5 years, it's down 35%. So if you were holding Verizon shares since 2018, you would be down on your money. Including those dividends, you might be flat in terms of total return because the dividend is so high. But what I'm going to look at for Verizon is any commentary around how they're going to restructure their debt and get their debt under control. As interest rates rise and the Fed keeps hiking, it's really destroying their earnings. And as we know, stocks go where earnings go in the long term. So if they're having tough times as it relates to their EPS, they're also going to have tough times as it relates to the share price. I am not looking to buy Verizon shares. I do believe it's a value trap and I think it's a dividend trap. GM is also reporting before market open on Tuesday. I'll be looking at the numbers to see where the auto industry is as a whole, and I'll be listening to the conference call to see any commentary around electric vehicles in general. I'm a shareholder of Tesla and have been for many years, so any EV news from GM, I'm going to want to hear about that. I'm going to want to hear any commentary they have around the Tesla supercharger network that they just inked a deal for GM vehicle owners to be able to use the Tesla supercharger network. So I'm going to listen to that, not because I want to own GM shares, but because I'm a Tesla shareholder. 3M stock is also reporting. This is a stock that's down 15% year to date and 50% in the past 5 years. 3M is a dividend king. They have had a ton of issues around 2 major lawsuits that they're dealing with right now. So I want to hear commentary around those lawsuits, what the progress is looking like as it relates to those lawsuits, if they're even going to talk about it, if they're even allowed to talk about it. And then I want to hear about the dividend. Is the dividend safe? That's what most investors are going to be looking at. If they have any weak commentary around the dividend, expect this stock to dive even more. This is a company I have actually stepped in and opened a small position with. It's less than 3% of my total portfolio, but I do have a position position with 3M. I think 3M's trading at a silly valuation right now, and I see some nice upside in the share price, and I'm going to be collecting that nice dividend along the way, so I'll be listening very closely to the conference call around dividend commentary. I'll also be checking out Spotify before the market open on Tuesday. What I want to check out with Spotify is this company ever going to turn a profit? I just don't see a path forward to profitability. That's why I'm going to have to stay on the sidelines with Spotify. I think it's a very enticing company. I think it will be a nice company to own shares in, but I just can't step in because the losses are so ridiculous on the bottom line. They've been EPS negative forever, and I don't see a path forward. I will be checking it out to see where those EPS numbers are, if we're trending in the right direction, if they have commentary around how they're going to get to EPS positive. I'll also be checking out Raytheon, Nucor, and NextEra. 3 very different business models in 3 very different industries, but they're all 3 dividend growth beasts, and Raytheon is a competitor of Lockheed Martin, which is a stock I own, so I want to listen to their conference call, check out their numbers, and compare to Lockheed Martin and see where the competitive difference is. Okay, we're at Tuesday after the market closed. This is the first time we're going to see the market move really big because we have Microsoft, we have Google, we have Snapchat, all reporting after the market close within 10 minutes of one another. If you own any stocks that mention AI whatsoever at all or play in the AI space, Tuesday after the market close is going to be a big day for any stock that's related to AI. Microsoft, very heavily related to AI with ChatGPT. Google, very related to AI, and Snapchat now has their own My AI, all 3 looking to capitalize on the AI super cycle that we're about to enter. So any good commentary around AI, any real concrete numbers that they can show that their AI segments are bringing in is going to move the AI space and all the stocks with it very high. If we hear any weakness from any of those 3 companies around AI, it's not leading to profits, it's not leading to revenues, the demand isn't what they thought it was going to be, expect a lot of weakness in the AI names. And that's not just all 3 of those, it's all of the AI names. So the commentary around AI and the numbers that the AI is bringing are going to be huge for the entire AI space. If Google drops in any substantial way, I may go ahead and pick up shares of Google. I've owned shares once before, I sold out, I made a nice profit, but I do love the company and their strength in the advertising space with Google search and with YouTube, and the sleeper side of the business with YouTube TV. So I'll be keeping a very close eye on Google to see what happens after the market close on Tuesday. Visa is a stock I've always wanted to own that I've never opened a position with. Visa is one of the most stable business models that we can ever ask for, and what I'm looking for from Visa's conference call is where's the consumer at right now, and that can give me a good idea of where PayPal stock is going to move whenever they report their Q2 earnings. I've been buying PayPal stock very heavily, so I'll be listening closely to hear what they have to say about the payment handling space in general. And if we see any big time weakness, I would consider going ahead and opening a Visa position, not only for the growth and stability and the amazing management team, but also that nice dividend. It's a very small dividend, but it's a massively growing dividend. They're one of the best dividend growth companies over the last 10 years. A few other stocks I'll be checking out is Teladoc. Teladoc is a big retail name. If Teladoc moves higher, this can be a risk-on catalyst for other stocks that are held by retail investors. The more risk-on names that are reporting great earnings, the more risk-on names are going to start to move up. Texas Instruments, I'll be checking that out for the semiconductor space, and then Waste Management, I'll also be checking out Waste Management. I'm a shareholder of Waste Management. I've been a shareholder for many years. I'm not excited about earnings. I'm not worried about earnings. I can sleep very well at night. As a Waste Management shareholder, there's really nothing to worry about. I'm sure they're going to keep me a happy shareholder. They're going to report great numbers just like they always do. Amazingly stable business model, great management team. All right, Wednesday before the market open, we've got 2 very popular stocks, AT&T stock and Boeing stock. These are 2 stocks I would not touch with a 50-foot pole. AT&T is absolutely a value trap, just like Verizon, but I will be listening in just to hear if they have any restructuring of debt conversations so they can get their EPS in a good spot. AT&T and Verizon are both debt-ridden companies. I am personally staying on the sideline with those 2. I'll also be staying on the sideline with Boeing, but I am going to listen in because I'm a shareholder of Lockheed Martin and I want to hear their commentary around the aerospace industry in general. Coca-Cola is also reporting. I'm sure they'll report great numbers. This is another thing where we want to hear where the consumer's at right now. Coca-Cola is a great dividend stock, but it is always disgustingly overvalued. I've never personally seen it as an undervalued asset all of my time in the market. It certainly trades at a premium and it gets that big Buffett boost to the valuation. Now, Wednesday after the market closed, tons of companies are reporting, but I want to focus on one in particular. And that one stock I want to focus on is Meta stock. This is a stock that's up 135% year to date. And this is really going to be a prove it day for Meta. they're going to need to prove that all their cost-cutting efforts are going to hit the bottom line. We need to see record profits for Meta for this stock to continue to move up. I do believe they're going to post record profit numbers and the stock is going to move higher. But you never know, that they might announce some massive R&D expense that hurts profitability in the short term. And I think if they're doing that right now and they're spending a ton on R&D, the stock is going to move down in the short term because investors want to see massive profits for Meta and very respectable margin expansion, because that was what moved the stock price so far down at the end of last year. So revenue growth rates are going to be important, but way more important than that is margin growth rates and EPS. If they post massive beats in EPS, they have a margin beat, and I think they're going to increase their EPS guidance for the rest of 2023. Any conversation around AI will probably move the stock up as well in the short term after market close on Wednesday. Thursday after the close, very exciting company that I've considered buying shares of. I've wanted to buy shares for literally years and I didn't pull the trigger on it and I regret it a ton. ENPH Energy. ENPH is going to be reporting Thursday after the close and they're expected to have over a 30% revenue growth rate with nice earnings growth, and I do see earnings beats coming for ENPH, and I would bet ENPH is going to move substantially higher. If we hear any weakness around demand for solar because the consumer's in a bad spot, I could see ENPH dropping, and I will be picking up shares if ENPH drops in a substantial way. I'll also be checking out Ford to see any commentary around EVs because I'm a Tesla shareholder. I want to hear what they have to say about EVs and how they're going to use that Tesla supercharger network. I'll check out Intel because I'm sure it's going to be a disaster. It's a dying company and definitely a value trap that I'll be staying away from. And then Roku is so similar to Spotify. Roku seems like a really interesting business model and a nice company to have exposure to, but I just can't step into Roku because the losses are insane. They can't get the spending under control, and I don't think they can get to profitability. I don't see any possible way they can get to profitability anytime soon, but I will be checking out their numbers. I will be listening to the conference call to see if they have any commentary at all around cost cutting or how they're going to ever get to profits. The revenue growth for Roku is expected to be 1%. That is not what we like to hear for what's considered a high growth company. A 1% growth rate is very far from a high growth company. So if they don't come in and beat that revenue growth number substantially, I could see the stock price going down heavily after earnings. So it's going to be an absolutely insane week in the stock market. The way I'm prepping myself is just to make sure I have some cash on the sideline, ready to buy up any big dips in companies I want to own positions with anyway. I'm not playing any short-term call options or anything like that. I'm not comfortable with the risk around earnings trades because you never really know what could happen in these situations, and I don't want to try to predict and time the market. So I've got cash ready to go. If any of the stocks I'm looking to open a position with drop in a substantial way, rest assured I'll be a buyer. And it's always interesting to see how stocks that you own that are related to other companies that are reporting, how do they move and how does the total market move? Sometimes when we have big tech weak earnings like this can move the entire market down substantially or up substantially. So it's either going to be a very green week or a very red week. We'll see how it plays out. I want to know what you're doing out there. What stocks are you looking at that are reporting this week? What are you excited for? Are you playing short-term options? Are you keeping cash on the sideline? What's the deal for you? I want to know about it. Let me know in the comments. I want to hear about it. Thank you for being here and have a great day.